Good afternoon or evening. I'm Alexander Rosenlew, the CEO of Orthex Corporation, and I have the pleasure of opening a little bit what we are doing and how we are building our brands and building our business in Europe. So the idea here is first to give you an overview. We are a truly Nordic company making Europe into a home market. As Thomas said, you can make choices if you want to produce yourself or if you want to outsource the production. We have decided to actually produce most of our goods ourselves, meaning that around 90% of which we sell come from our own factories. That gives us a good control of quality and also shipments and being able to quite good balance the supply with the demand and the peaks, because there are certain occasions when demand is higher. That's a good thing to build it on. We have customers in about 40 countries, but the main market for us is Europe. We're of course happy for all the customers, and in the end it's the consumer that makes the choice to buy good products from us. We have 3 strategic brands. That's SmartStore for home storage products, GastroMax for kitchen products, and then Orthex for home and yard, and of course also being the company name. We are quite a lean organization, 300 people. The factories are highly automated, as the cost of producing or so on with the labor-intense setup is really high in the Nordics. It's a prerequisite for us to be very modern in our production facilities. We don't do any single-use products, and we are quite happy to consider ourselves as the forerunner in sustainable business in our product groups. So today the presence is that we have the 3 factories, 1 in Finland, 2 in Sweden, and then we have sales offices in most of the major European markets, or at least close to the retailers that are of most interest to us. Moving on, storage under the brand SmartStore is about 70%, almost 70% of sales, and that's the one which is growing fast, and in our opinion we have probably the best offering in the world when it comes to quality and functional products in the storage category. Kitchen products is about more of the preparing side of kitchen, not so much serving. It's an interesting business where you can use a lot of sustainable materials and you can make the home chef shine with good products. And then home and garden, about 11% of the turnover, traditional products made out of plastic. The overall mission we have is to make everyday life easier. The products are intended to solve a need in the home, to make life better for the user. We focus a lot on design, because if the design is good, people want to buy the product. And as well, when the products are made to last tens of years, at least the design is timeless, so you wouldn't grow sort of out of looking on them. You would save the products and use them for many years. And we invest a lot in new product development. The goal is to have around 10% of the yearly turnover coming from new product. Then if we go into the strategy, which is clearly the interesting part here, we are on a journey to make Europe a true home market for us, to become number 1 in storage as a brand in Europe. And we're also at the same time strengthening our position in the Nordic countries. There's still room for us to grow within our categories. We can do cross-selling of categories, and we can strengthen our position. So a really clear category strategy, especially in storage, is needed to build the growth foundation. And then for us, sustainability is one of the key things we work on. Everyone should be proud of coming to work for a company that's actually thinking more about the future and the future environment and taking its responsibility when it comes to plastic. And then the innovation. We have three major blocks of growth. The number one block is continuing the good growth we have in the Nordic countries. And the second block, to me, that's at the moment the most interesting, and that's actually growing in Europe and in the main markets of Europe, together with the big retailers. And that market is about 10 times the size as the Nordic, and our market share in that area is still fairly small. So there should be plenty of things to do. Of course, the category is not new, which means that we need to convince every store chain, consumer, customer about why they should buy our products. It's not something new on the market, so you need to be better than the rest. The third building block, really interesting, fast growing, is the e-com block. Not only the Amazons and the eBays and so on, but also the e-com of existing normal customers, such as, for example, Clas Ohlson or Bauhaus, as such, who are building their own e-com presence on the market. And then there's let's say a joker, which is the market consolidation. The market is fairly unconsolidated, yet there are a lot of family companies or family-owned companies, and there's basically 3 or 4 players in each of the major markets who compete against each other. And there should be a good opportunity to find M&A solutions. However, we are quite strict on the quality we do ourselves and on the brand strength, so we will not go in and buy something just to buy. It needs to fit the strategy, it needs to fit the price, and the timing needs to be right. But that's clearly as I call it, a bonus or a joker card in the growth strategy. A few words on sustainability, since it's important for us, and here clearly the main target we have is to minimize or at least decrease our impact on global warming, and that we can do through, first of all, really good long-lasting products that you can use for many years, and at the end of the life cycle of the product, it can be recycled into a new product, preferably made by us. Then the usage of recycled and bio-based materials comes into a big role here, because for us the production is fairly clean. There are no smoke coming out, there are no pipes, there's no water waste. So actually the place we can actually influence the most is the raw material, which is about 90% of our emission, is the choice of raw materials. And therefore we are looking into new ways of recycling, new ways of using bio-based materials. And to be trustworthy in this, I think every company that's not greenwashing needs outside certifications for what you're doing. So on the left-hand side, you can see here all the certifications that the company has obtained to show the whole business, and on the right-hand side are some of the symbols that we can place on our products so that the consumer in the store knows that they know that they have done a good choice in terms of the environment. So a bit on innovation. Here you can see some of the products. I said that we strive to have about 10% of our turnover on new product. This keeps us interesting. This keeps us interesting in the eyes of the buyer in the stores, in the retail chains. When we come there, hopefully the buyer is excited. They know we bring new product that can help them grow, that can help them be successful. And at the same time, we have the opportunity to follow trends and be sort of on the pulse when it comes to what the consumer needs and wants. Another part of the strategy in action, I said we are striving to still keep winning in the Nordics, and there's a lot of ground to be won. One of the best ways is actually looking good in store. That's where the action is. That's where the consumer, the shopper, makes his choice. That's when the decision comes between should I buy this brand or should I buy the other brand. And especially now that spending power is a bit low, people are careful sitting on their money. If you look good in the store, then most likely you will be winning the game. And the same, very easy, goes for Europe as well. If you can show your customer that with your shelf implementation, they earn more money, they get more sales, they want to do it in more and more of their stores. So this is a good tool to actually look as good as possible, help the retailer sell more. And if you can help them, then most likely you are successful as well. There's, of course, many aspects to this. It's when to do campaigns, which kind of product should be in which type of store, what's the assortment, what's the right price points. There's a lot to take into account here. But I would say well spent money in terms of building brands. We have so many millions of shoppers going into the stores every day. And if you want to look good in the stores, the physical stores, why don't you look good in the e-stores as well? This is just an example of how an e-store like Amazon can look like when you start looking for our categories. So basically you build your brand there quite well, and the learning from these e-giants you can actually apply then on many other channels and e-com stores where they are starting up or where they need help or so on. So we strive to be the expert in everything when it comes to storage, kitchen, and then the home and yard categories. So a small comment on recent performance. I think Q1, not going into all the details, we got quite healthy growth, and that's a good start to the year in a consumer industry where people are spending carefully, where you need to make an extra effort to actually get growth. So really happy for the start of the year and the development there. And there you can see, especially in storage, there's growth, and that comes from the fact that almost all the new customers, the new listings we get in Europe involve storage as a starting point. Then when we're in with storage, it's possible to sell the other categories as well. But storage is clearly our edge at the moment. So we had a healthy growth both in the Nordic countries, but also in the rest of Europe outside of the Nordics. So quite pleased with the situation. If you look at the financials, they've been improving lately. We had a few years ago quite a challenge with extremely expensive raw materials. I think the situation has been a bit more stable since, and we've been able to lift the game to actually get both top line growth which helps the profit levels, and also more normalized raw material prices, while adjusting the full operations to the demand. So quite a good start to the year in terms of profitability as well. Spoke about raw material prices. In this curve you can see what it looks like when raw materials suddenly jump up at about 80%, a price 80% higher than what we are used to. And this is not easy to tackle fast. I mean, there were just a few windows of doing price increases to quite strong retailers, and that occupied a lot of our time, a lot of our efforts to actually get to a pricing which was correct at the time. And now, luckily, lately the pricing has been of raw materials has been more stable, and the outlook, at least our expectations are that the demand isn't too strong. We know from official sources in for example the car industry, that's a big plastic raw material buyer. So we expect the summer at least to be on quite stable levels. When it comes to investments, we usually invest into three things. First of all, it's capacity in the factories, it's renewal of machinery in the factories, and then a big chunk goes into new product. So that's what we've been doing. We had quite a big amount of investment in Q1, especially in new product. It's a bit of a timing issue here, even though it's a lot compared to previous quarters. We believe that the normal pace of investment is around, let's say 4 to 5% of the turnover goes into to CapEx. And then if you look at net debt, clearly going down, we are now at 1.3 net debt to net debt leverage. And we've been going down quite fast on that one as well. So looking at the overall targets we are looking to grow sales. For us, sales growth means leverage. When we get more out of the current structures, it means more profit coming on the different lines. And we're looking to grow the whole company by more than 5% yearly, and then outside of the Nordics, clearly stating that the growth target is outside the Nordics. That should be increasing by more than 10% annually. And what we did now was that we grew in the last period, we grew at 8.1 in the whole company and then 7.2 outside the Nordics. Profits, we're ambitious. We believe we can do an 18% EBITA. We reported 12.6. I think we've been investing quite a lot into the business, into the structures, into the local organizations. And there's still some, and not only some room, but there's room to grow with the existing cost level we have. And we believe there's a potential for leverage on this one. And then on the overall indebtedness leverage at 1.3, we say we want to be below 2.5, and we could go over in special situations like M&As and so on. And we also pay, we like to pay dividends. We pay about half or a little bit more of the net profit in dividends, and that we done. The installment will be in 2 parts. So this year we'll pay 54.1% in dividends. So if we summarize, I think it was a good start of the year, and I think what we're doing now at the moment is that we're actually investing quite a lot in the business to actually have a good base to grow on. We're also forced to invest quite a lot into the let's say commercial part of the business in order to attract shoppers that normally would sit on their money. So a lot of campaigns going on, a lot of good offers, etc., to keep the products growing. So I think this was my presentation. Thank you very much for listening.
Alexander, please sit down and join me for a Q&A.
Thank you, Thomas.
So if any of the viewers have any additional questions, please feel free to type them in the question box below. But to start off, one of the viewer questions is regarding the operating environment. So what kind of a market environment would be the most ideal for Orthex?
I think for us a stable environment where let's say raw material pricing costs are predictable, because there's a certain lag in which we can make price adjustments. So that would be sort of the cost side of it. And then we have the pull side with the consumers, and of course the more money the consumer has, the more they will be able to spend on consumer goods.
Yeah.
So that's sort of, on the other hand, our kind of products are not that expensive. So buying a plastic box, a good plastic box, it won't ruin you, and you should be able to do it if you live a normal life.
Yeah. How about like deeper recessionary environment where demand slows down? Usually oil prices and the prices of your raw material has come down quite a bit in this kind of environment. How do you deal?
Historically, we've seen that, and this was before the IPO, that sometimes when there's a really deep recession, you can see oil price really declining, and you can see raw material going down. And then if you are able to maintain your top line, it will mean quite a good profitability.
Yeah. Well, jumping on to strategy regarding direct to consumer. So you used to have a online store here in Finland, but well, we've seen the Nikes and the Fiskarses of the world pushing towards direct to consumer, but instead you withdrew from there and focus on sales via retail. How did you go about this decision?
I think there are plenty of things behind it, but first of all, we tested out our own web store, and quite fast you realize that in order to have a very attractive web store, you should spend a lot of money, and there's a big question mark if the product categories which we operate are interesting enough to drive real passion to go into a very specific website. I think those who are looking for our kind of products, they would go into a larger platform and they would like to see the different options.
Yeah.
Then I think our task is to look the best on that platform.
Yeah. And this is a thing you often talk about, helping your retailers sell more of your goods, but how fast do they see tangible benefits from taking your advices and maybe organizing their shelves according to your suggestions?
Well, we're pretty confident when we tell them about the business case, and they are usually built on real knowledge that we've collected from similar stores, similar chains, similar environments where we have done the changes and we have measured the sales out of the shelf before and after.
Yeah.
Of course, it's not a watertight proof that in this new shop the same will happen, but we're almost certain that at least there will be a significant uplift in sales.
And usually you go into these conversations with previous data, right, that you show?
Yeah. And then since we have hundreds and hundreds and hundreds of different customers and their stores,
yeah,
usually you can find something which is a good reference group for the new opportunity. So really good data to have.
Yeah. But moving on to regulation, have you seen any dark clouds regarding regulation and Orthex?
Lately, I haven't seen that much of dark clouds. I think what is positive here is that we're going into a, let's say, more straightforward labeling of the real benefits of the products, meaning trying to get away from a lot of greenwashing. And since we are doing and putting really a lot of efforts into sustainability issues, we are certifying ourselves. It can be sometimes a bit disturbing when you can see somebody who just puts a homemade label on telling how good the product is without proof for it. Yeah. So I think there the regulation might even help us.
Yeah.
Then you have the single-use directive. We don't do single-use products. We believe that in certain product categories, making them out of plastic and durable could be better than the single-use alternative. And we believe that could be something good for us. Okay. Then, if I may, one further.
Please go ahead.
Lately, we launched a lot of products in the sorting part, so sort of different ways of sorting your waste and collecting your waste. And I think it's a good time to do it because the regulation is such that you need to sort bio-waste and you need to sort plastics and you need to sort. And if we can help with our products to make the sorting both looking good but also being easy, then we're onto a nice trend.
So it's a growing theme you've caught on to.
We believe so. Yeah. We believe so, yeah.
But what about in general? Isn't the consumer also becoming maybe more wary or less willing to buy low quality products? Instead, especially in the Nordics, it feels like you're willing to go the extra mile to get a more higher quality product.
Sure, we hope that that's the case. And usually, and quite often when you buy a product, regardless of if it's ours or someone else's, if it has a higher quality, maybe actually the use of it costs less. Because nothing is more annoying than going into a shop, bringing home a product, and then the first or second time you use it, you break it. Yeah. And then you need to go back and buy a new one. So probably by lifting the quality a little bit on your purchases, you might even be saving money.
Got it. How about your M&A opportunity? I feel like that's a question you get asked on your webcasts a lot. Yeah. But you flagged it a lot prior to your IPO, but haven't done any actions when it comes to that, at least yet. So what have been the key things, how would I say, keeping you from being active there? Is it that there's just no suitable alternatives to buy, or?
I think there are probably a few things. First of all, the market was behaving strangely, and a lot of companies were suffering a lot when the raw material prices were high, and understandably engaging in discussions around selling your company with really bad numbers is not so tempting. And then on the other hand, those who were on the brink of survival at that stage, and the market was tough, maybe it wasn't the time for us to buy more problems. Then I think focusing on what you do best yourself and keeping that house in order was the more prudent way of approaching the opportunity.
Got it. And staying on the topic, the current Orthex was basically created via M&As. That's how you expanded onto Sweden some 10 years ago, and you were the CEO back then also.
Yeah.
And the current management has experience from M&A. So what are maybe the key takeaways you've learned from those experiences?
I would say it was an extremely fun time because we put together 3 companies and formed basically one new of all the best bits of the 3 existing ones, and a lot of new parts as well.
Yeah.
So it was fun times. When it comes to integration, I think one of the key things that made it good for us was the involvement from management, spending a lot of time in the different locations and explaining to all of the personnel why this makes sense and what the direction will be once we're all together, and building sort of a common vision for what we want to achieve. Yeah. But integration is, I mean, it's always a lottery. You don't know what you get before you actually buy it, and you meet all the people, and maybe they will be kind in the beginning, but then at some point they will start doubting.
Yeah, I can imagine it.
So
there being quite a few surprises. But in general, how do you approach the production versus sourcing question that you sort of alluded to in your presentation?
Yeah, I think it's really healthy to look at what you could source and all the time sort of be present on the markets where you actually can source, and going to fairs. I've been to China quite many times in the different fairs in Canton and so on. And of course you can buy almost whatever in these fairs. And then you need to compare that to the advantage of both cost-wise and then flexibility-wise, quality-wise, what you believe you can do yourself. And then it's a math to decide which way to go.
Yeah. And you currently have, especially on the kitchen side, some products you source.
Yep.
So if I for a moment put on my greedy capitalist hat and ask you, would it be more profitable to produce them yourselves? Or is this optimal?
Yeah, could be some of them, but then if you look into the kitchen category, and what we usually want to do is we want to have a full offering. We would like to have a shelf. And the buyer is basically letting in, I would say, suppliers that have a wide assortment. And with what we produce ourselves, there's clearly room to widen the assortment a little bit. For example, knives or cooking thermometers or such, which the buyer wants to have, and they would like to buy them from us because we have the wider assortment produced in-house. So it's both a business opportunity, but also a way of becoming a more holistic supplier.
And could I say that it gives you the opportunity to try out the product, how it works, and then maybe later on make the commitment to start producing it yourself?
Absolutely, and that has happened a few times when you manage to source something which is really relevant, and you might even come up with 1 or 2 tweaks to that one, which would make it even better.
Yeah.
And you do it in-house. And then you can get sort of a good new product out of a sourced product.
Got it. And one final topic. You have a strong market share in Europe, in the Nordics, but the growth opportunities long-term, they are in the rest of Europe.
Yep.
How is the European growth strategy progressing?
I would say it's progressing quite nicely at the moment. We had during Corona, I mean, many people think that Corona is good for companies that are doing consumer goods. For us, it was a little bit of a challenging time because finding new customers, meeting people is quite crucial when you want to build your footprint. So there was a little bit of a lag in the rollout, I would say, even though we managed to grow. At the moment, I would say that some of the European markets are quite under pressure when it comes to purchasing power, which leads to the fact that the retailers are a bit careful on changing the assortment or bringing in new suppliers. But I think it's if it were easily done, we would have done it already.
Yeah.
I think it's hard work. You need to turn every stone, and we're doing it for sure.
I can imagine. Reflecting on yourself, is there something you feel like you could have done better or put more effort into?
I think you can always do things better. There's no question about it. It's so many things, so hard to give you a very straightforward answer on that one.
That's an honest answer. Thank you, Alexander, for your time.
Thank you so much, Thomas.